FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. The date is March 7th, 2016, and appears that we're headed for potentially higher precious metal prices. What is the stock market going to do? Well, wanted to bring back Nick Santiago. Nick, your site In the Money Stocks been pretty good with the recent moves that have occurred. So I figured it was time to bring you back for an update, and welcome.
Thank you very much, Kerry, for having me. It's always great to be back here.
So, stock market back over 17,000 for a little bit, the Dow, and happy days are here again, right?
Yeah, so it appears, but the reality of it is we had a real rough start to the year and a real negative January. Very often that reflects a real negative year overall. So I think we're getting a nice counter trend rally bounce right now, but I don't think that this market has all that much built into it as of this point. So if you take a look at the chart, and I know a lot of members probably remember right around February 11th, February 10th, when the market was making a little double bottom low on the S&P 500, it looked real dire. That was when we were buyers, but now, slowly but surely, we're looking to sell stocks into this rally right now.
Yeah, so you're selling into the rally. You think it's a dead cat
selling
bounce?
Right into this, absolutely.
A sucker rally?
Yeah, this is predicated. This move fully occurred on the back of oil moving higher, and it was a severe oversold condition that we were dealing with right around February 11th, and now this is it. We were looking for a move up to the 200 level on the spiders, or if you're looking at a chart of the S&P 500 to 2,000, and now I think we come into huge overhead resistance at this point in time, and this is where the professional traders will start taking money off the table and selling into the amateur traders right here.
So the strong hands are transferring into the weak hands and waiting for a decline.
Absolutely. So what happens here is when markets go up like this, you get all these people that watch CNBC and Bloomberg, and all these people come in, and the small speculators says, I got to get back in the market. It's a bull market again. And next thing you know, that's where the big money sells right into them. So the game now is to not buy stocks, wait on it, wait for a pullback, wait for a pattern, or if you're really savvy at this market, you take a shot at select short positions, which is what we are doing at this point in time.
And yeah, so what do you think are the best sectors to short here? Obviously, Amazon has taken its crash, right?
Yeah, well, you have a lot of technology that has been acting very weak. I think Apple, Google, Amazon, LinkedIn, Facebook, they all look terrible up here. So, they basically made their retraces already. Maybe some of them will have a little bit higher to go, but the reality of it is technology looks like a real good area to short. Seeing weakness in Netflix as well. That's having a real tough time retracing back up. So these are all areas where I would consider shorting the market. Also, we're getting to very good levels in the energy stocks, which I think could be shorted as well, selectively. So, when you take a look at a stock like ExxonMobil, which is really the leader of the pack, this is going to run into huge overhead resistance around $84 and $85. So, you don't want to short the best stock out there, but, some of these stocks that have had big retraces out here recently, the Seadrills of the world, all these mid-caps and small-cap energy plays, they're going to be excellent shorting opportunities because they've already had their squeezes. And now that they've squeezed up already over the last week or two, and they've had huge moves, these stocks will turn around and be good plays on the short side. So you got to know what you're doing. You got to know where to look and what kind of chart pattern setups to find. But there's going to be quite a few opportunities over the next week or two.
Yeah. You think that close? Next week or two, we're going to have a retrace already?
Oh, sure.
A retrace of the retrace?
We've already had a big run up. Now you're going to get the ECB news coming out later this week. Next week, we'll get the Federal Reserve news coming out. And, the reality of it is, this is a lot like trading is a lot like professional wrestling. The good guy wins for a little while, the bad guy wins for a little while. And then ultimately, somebody sets up the stage to the next big storyline. So again, the stock market is very similar similar to that. And the reality of it is, we've had the big fall. Now we're getting the big run up, and now it's time for the next pullback in the market. At least that's how we have it playing out.
And your opinion here, Nick, long-term bear market, we looking at a secular bear, or is this just going to be a quickie in and out and you're done?
No, I think that most of 2016 is going to be a really, tradable year. We're going to be very, very range bound. As you know, the market peaked out in May of 2015. A lot of people don't realize that. So we've already been, we haven't made a new high in the market in over 9 months now. So, that's already telling us that we're probably in some kind of a minor bear market here. But the counter trend rallies like we just had beginning from February till Friday has been very, very sharp. And that's what you want to do as a trader, be able to capture those rallies, which we did. And then you want to be able to sell against them when you think they conclude. So it's going to be a range-bound year. That's what the 6-year of a decade does. But like I said, we haven't made a new high in the S&P 500 since May. So I do think that there probably is going to be a lot of choppiness and volatility throughout the entire year of 2016.
And as long as we're talking about that, let's look at the dollar. Hasn't really made a new high a couple of months ago, broke 100.
Yeah, the dollar's been very, very range bound, and that's also indicating exactly what the market's doing as well. So, and again, a high dollar is really negative for exports, as we all know. So, people don't want the dollar to scream higher, although I think the dollar ultimately next year and even maybe later this year will break out to new highs. Multi-year highs. But with that being said, right now you have a range on the U.S. dollar index, and that's the dollar versus a basket of 6 currencies, most notably the euro, the British pound, and the Japanese yen. But the high end of the range is about 100. The low end of the range is around 95, and we're just going to see the dollar just chop around in that range, and hence we'll see the market pretty much chop around in a pretty wide range as well.
So are they raising rates here, or is this just show?
No. I can't see the Fed raising rates at all. Even after the so-called good job report that we had on Friday, that's probably the talk of the town. The Fed's going to, go another 25 basis points higher in the Fed funds rate, but I don't see that happening at all. I think the Fed is so concerned with keeping the markets buoyant and keeping everything status quo that they're not going to try to disrupt the apple cart. And quite frankly, I mean, when we were falling and the markets were selling off in January and early February, all we heard was chatter that, they can't raise rates. Now the market gets a rebound on the back of an oil bid, some short covering in oil, and now rates can go up. So, they're not really looking to raise. They really didn't even want to raise a quarter point. They just had to do it.
Credibility.
For credibility purposes, exactly.
So dollar stays pretty much where it is in range bound along with stock markets, but probably heading to the lower over time. Where does that leave precious metals?
Well, precious metals have been the best performing asset in 2016. So if you just take a look at a chart of gold, really since the middle of January, it's been soaring and roaring. But gold, in all fairness, and we were long gold for a while, and now we are just saying, hey, sit on the sidelines, let it put in a pattern. The trajectory on gold has been almost parabolic, and that is unsustainable. So we want to see gold pull back here a little bit or just go sideways and consolidate. And I think gold this year can possibly, if you get that pattern, can make its way up to, 1,400, possibly 1,450. And considering, gold was trading at around 1,050 earlier in the year, I mean, that's just a tremendous move this year. So I would wait on gold now, but watch the pattern. And, once we see it, we will be buyers of gold again.
Yeah, it seems like we're due for a pullback because it crossed that magic 1263 number, which was definitely a technical resistance point. It closed above it for a day. Friday, it's back below it. Today, looks like a maybe.
Yeah,
we'll
today we're at 1267. Gold is down about $3.50 today, which is nothing really wrong. That's a healthy. If you can do that and just stay sideways for about a month's time, gold is setting up to go a heck of a lot higher in 2016.
Yeah, or even decline a few percent. You want it to decline.
You'd love to see a pullback, especially as a trader. We want to see those little pullbacks because right now, who's jumping on it is just the small speculators. And again, they're not going to have the gusto to keep that moving higher. You want to see the pullback occur, pattern, a sideways consolidation pattern. And then, this can go all the way up, through the 1400 level.
Yeah. Well, my feeling till it breaks 1300, I'm not convinced, even though I know it hit a really significant technical resistance point. I got to see 1300 to know that we're kind of like in new ground. And it would just make sense at this particular point for a pullback of, 5 to 10%, somewhere in that range, maybe. It would just make sense that would.
Sure. And it's healthy. It's healthy. Yeah. You don't ever want to see an equity move up in a straight line because that's unsustainable. That means that you're just getting a lot of hot money in there immediately, and then like a hot air balloon, once the fire stops, it comes right back down to earth. So the best thing to see would, like I said, would just be some sideways consolidation here, some time off, little retrace, little pullback, and then watch the pattern because this has potential in 2016 to go a heck of a lot higher.
You could just see that the market is behaving differently, both on the equities and the precious metals, as well as, currency's kind of been stuck here, but it's behaving differently than it has for years. Both.
Oh yeah, no doubt about it. We're seeing a total remake of the tape, as I like to call it. Everything is trading differently. We're seeing different relationships start out. The currency market, with the news that there was going to be the British were leaving the European
Brexit,
Union and
right.
things like that. The Brexit, yeah. You're seeing the British pound catch a bid. At one point it was trading as low as 138. But these are all the disconnects that are going on around the world right now. So I think we're going to see more of it in 2016. Don't forget, we have negative interest rates now in Europe and in Japan.
Right.
That's something entirely new. From what I understand, Japan is running out of safes for purchase in their homes, and you're going to see more people stuff money under the mattress. So it's definitely a changing time.
Yeah. And the key is, if you're going to get a safe, don't tell anybody about it. Secrecy is your friend. I always tell people, you're getting a safe, get the highest quality insurance rated safe, because the stuff that they sell in the big box stores, Nick, you could just open it up with a can opener.
Oh, it's an absolute joke.
Yeah,
it's an absolute joke.
Gotta be.
And the other thing people need to realize is a lot of people think that all safes are fire resistant, and that is not the case. So do your homework when you do go out and buy a safe.
Yeah, there's different ratings: B, C, just documents, just fire resistant, and then you've got the insurance rated ones, the TL, TLER. They're like torch resistant and takes like 2 hours to break them open for the most adept thieves. The UA rating on safes actually is the most interesting rating that they do, Nick. If you're aware of it, they actually have safe crackers, highly talented safe crackers on staff. And when a safe is submitted to them for rating, they break it open like they were stealing from the safe, and that's how they come up with the rating. It's a fascinating thing.
That's the way. That's what you want, though.
Yeah.
Right.
So
if there's going to be somebody to break into your safe, you want the best out there doing it.
Yep.
And again, in my day, I bought quite a few safes, and again, I think that it would be good for people to do their homework on it and know what they're getting before they just pick up a box with a combination lock.
Yeah. Oh yeah. And those gun safes, most of them are worthless. They're like thin gauge steel. You want a safe that nobody can pick up except with a forklift, and that they can't break into unless they're going to blow it open or they have an oxygen lance or something like that. So safe shopping based on your budget, but expect to pay a lot for a decent safe for sure. Anyway, Nick, where do we find you and what's your latest offer?
Well, you come over to InTheMoneyStocks.com and you could see us there. And we offer 7-day free trials to our research center, which you'll get all of our nightly chart setups. You'll get all of my cycle work. You'll get my work on gold, on oil, on the 10-year U.S. Treasury note yield. You'll also get my work on the S&P. And we hold 2 times a week, we hold what we call a No Hype Live broadcast, where we allow all the members to come in, ask me and my partner questions about the market, questions about any stocks you might be looking to get into. And we do that twice a week. And you get all all of our chart setups. You get all of our trades and everything that we're doing, and it's a real good program. It's called the Research Center, and very, very popular.
All right. Well, inthemoneystocks.com. Check out the offer, and you'll find a link, as always, in the show notes to this interview on financialsurvivalnetwork.com. Go there. We got an offer giving away the free ebook that I wrote a couple of years ago. You'll see the pop-up. Just fill it in, and you'll get the book right away. Nick, always a pleasure. We will talk to you soon.
Thank you, Kerry. Thank you for having me, and be well.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.